Tube, what up? What's going on? Let's get the show started. Happy Monday to all. Just so you know.
Turn our volumes up.
Yeah, everything good. As loud as it can go. Yeah.
We got us off mute.
Yep. We good. We here. Monday. What's up?
Market Mondays. The only place to be every Monday.
Happy 14th.
The most consistent regime on the internet. You'd be hard pressed.
Yeah, we back. We back home too. I know you're like, wait, y'all in Atlanta? Y'all in Miami?
Shout out to Atlanta, man.
Shout out to the whole. Hey, shout out to our brother Wall Street Trapper.
Shout out to Wall Street Trapper for sure. Dope event that he had. Dope event. Shout out to Rap Snacks, man. James, Master P, Wise Intelligent, the whole team.
Denise, what up?
It's just love.
Yeah, we need a new care package.
Please.
The what we had, the best ones was the Migos joints, right?
Yeah.
Some chips.
The good brother.
Yeah, shout out to
Happy
Rap.
Monday.
Yeah.
What's the deal, my guy?
I took a page out of Rick Ross' book. They're not an official sponsor yet, but I just show love.
You gotta pay it for it in advance, right? And show love.
Yeah. If y'all would like,
I'll be tuned in.
please.
Low key, nobody's saying y'all kind of bumping Tim Ferriss and a few others are out of that spot, like to have Steve and Rick. Them some hard interviews to land, man. So I'll take hella notes on them.
Appreciate it.
I'm a millionaire, sister a millionaire. I'm like, ooh, I got work to do. I love it.
Yeah, we would like a package of the honey barbecue. I think
no, they're actually pretty good. Have you ever tried the Rap Snacks?
Little Romeo's flavor, please.
No, they're actually good. They're actually good.
Yeah, they're good.
I'll be honest with you. They're actually
Little Boosie's
good.
one is good too. He got like a spicy barbecue.
Yeah, shout out to Master P, man. A true legend. Shout out to James too.
Yeah.
Legends in the game.
EYL Rap Snacks.
Shout out to Wall Street Trapper. Dope event that he had over the weekend in Atlanta.
That look great.
Yeah, shout out to Trap. I believe he's in Africa right now.
Yeah, or he's on his way. Shout out to everybody that showed up to his event. There was a lot of earners in there. There was some Red Panda family in there. They showed a lot of love. Shout out to the circle of CEOs. Yeah, every time we come to Atlanta, it's open door policy. Shout out to our guys.
Shout out to Alex. Shout out to him 500. Shout out to Mr. 2 Weeks Out. The whole crew.
The whole crew. So, and happy birthday to Robbie.
Oh yeah, my boy Robbie. Shout out to Robbie, man.
Logistics champ.
Good dude right there. Okay, welcome back. Market Mondays. We got a lot to talk about today. If this is your first time joining us, welcome. We have a jam-packed week for EYL University and EYL, so I'll run it down before we start.
Yeah.
Shout out to my boy B Diddy, Living Legend, Baron Davis.
Yes.
That
was fun.
One of the illest guys. Unfortunately, he had I believe knee and back injuries.
Yeah, he had 3 knee surgeries. So he had, before he even got to the league, he had 2 knee surgeries. One in high school, one in college. Then he got to the league, and then the knees led to his back being hurt. But just a legend, bro.
Yeah, one of the most explosive point guards ever. If he didn't get hurt, he would have definitely probably been a Hall of Famer. Like, his athletic ability was bar none. He was like Russell. He was like Russell. No,
before.
He's in that category,
like that explosiveness.
Yeah, it's from the point guard position. Yeah, for sure. Yeah. That explosive point guard.
Yeah. So but what's even more impressive is what he's been doing off the court. So he's a great entrepreneur. Early investor in vitamin water. I didn't even know that.
Mm-hmm.
He got his marijuana company. He directs films. Has some movies that he's directing.
Yep.
He's big on investing. I just realized I listened to it yesterday. What's that app where you get to invest in the 529 plans for the kids?
How you gonna do this to me right now?
It's dope.
I said it wrong on the episode like twice.
Yeah, but he's big on that.
I probably got it.
So yeah, shout out to Baron Davis. He actually is a very, very intelligent guy, real sharp entrepreneur.
Younes.
You heard of Younes before?
Nope. Let me write it down.
Yeah,
he's a college savings app.
It's a college savings app. So yeah, he was telling us about that. So we had a great business conversation with him. And yeah, it's dope to see athletes. You always hear the horror stories about athletes that blow their money or go broke, but it's good to hear athletes that made a lot of money in the league and tripled and quadrupled that money after they are gone and have provided opportunities and jobs and things of that nature. So he's a real hometown hero out of South Central LA. Shout out to everybody in South Central.
In UCLA too.
Yeah.
We try to get the specific section, but we just settle on South Central. South Central it is.
Yeah. Shout out to B Diddy.
Well
So that comes out tomorrow at 8:00 Eastern Standard Time. Check it out on YouTube. Check it out on all audio podcast outlets. And then Wednesday we have we doing a group.
We got the group chat.
Yeah, group chat call. I think Francis and the guys from Cheat Code might come in. That's for EYL University. And what do we have this weekend for EYL University?
So we got the Legal Club is meeting tomorrow.
The Legal Club.
Shout out to Rosetta and the whole Legal Club. We got obviously the group chat, and then Thursday we got Breaking Bread.
Yeah, Bread with MG the Mortgage guy.
He's doing a doubleheader too. He got Breaking Bread at 7, and he's part of the Liddy committee. He's going to be a guest with the Liddy committee on Thursday. So shout out to MG.
EYL University, man, it's jam packed. Every single day there's something. So if you're interested, go to EYLUniversity.com. Sign up. We have an offer that we're running 60% off of the annual membership. So that is the rundown for us this week. And make sure you check out all the shows on EYL Network. Rants and Gems.
Hey, I just got a text message and shout out to Janet. She said, don't forget that EYL earners that are from Canada are meeting tomorrow.
Shout out to Canada.
Toronto.
But yeah, shout out to EYL Network, man. My boy Dave Shands, my boy Ash Cash, Rants and Gems with MG the Mortgage guy and Kiana Watson.
Killer.
Mental Health Podcast.
In a Wealth.
Shout out to Elizabeth and Dave.
Yeah, had a lot of fun.
Shout out to Casanova.
Yeah, Casanova Brooks. The Inner Wealth one was dope. I actually produced the last episode, man. It was fun to just sit behind the scenes and tape.
Dope.
Yeah, it was dope. Yeah. Make sure y'all go like, subscribe, and tune into all those, man. And don't forget Market Mondays.
Don't
forget that.
The granddaddy.
The big show.
Shout out to
Crystal Ball Central.
Shout out to everybody that's checking out Market Mondays, man. All right, Ian, we'll toss it over to you. No. Let's
Yo, so as we've done for the past few weeks, this episode of Market Mondays is brought to you by Ally Financial. Shout out to our good folks with Ally Financial. They are relentlessly focused on doing it right. So they're doing something really, really special to give everyone a great opportunity to learn how to become a better investor. That's why we're here, right? So we both share in that. Ourselves and Ally share in the belief that everyone can and should invest in their future. So Ally is launching their free digital conference on YouTube Live Wednesday, June 23rd, free. All right. So whether you've been investing for years or just opened your first brokerage account, becoming a better investor has something for you. During the conference, speakers will take a look at how to prioritize finances, the rise of retail trading, different ways to analyze stocks, and how cryptocurrency has changed the investing landscape forever. Don't miss out on the chance to become a better investor for free. So reserve your spot at ally.com/digital conference. Shout out to our good folks at Ally.
Yeah, shout out to Ally. They've been good. They've been good strategic partner. Lule.
Yeah. The queen.
Yeah, she came on.
So sweet and kind. Yeah.
Yeah, she came on and gave us a legendary episode.
Yeah, it's crazy because the talk that we had 2 or 3 weeks ago about inflation, that's all that was in the news today. So I was like, it was kind of like, all right, I'm glad that everybody has a basis of what they're talking about now.
Yeah, I like the people at Ally. And Ian's actually been a customer at Ally for a while.
That's a fact.
Forever. Yeah, you guys know I don't endorse anything. So if I put my name behind it, they've been great, So kudos to everybody at Ally. I appreciate you.
Yeah.
Maybe we should do a Market Mondays and Ally tour just for the people out there.
Yeah, we'll pull up back to Detroit.
Yeah,
that's easy.
Yeah, sure.
That's easy.
We gotta go to detail. So, all right. We'll throw it. Oh, actually, before we throw it to Ian, can we read the disclaimer, please?
Yeah, let's do it.
So people can please.
So you know what they run up on us now. The first thing they say when they see us in the street, do your research.
You have to. They'll see people asking real quick. Is it UNEST or UNEST?
I believe it's. I'll put it in the chat.
Yeah. Well,
okay. Because I don't want to mess it up.
Yeah.
But I botched it like 3 times on the episode though.
Yeah.
So number one, this is a message brought to you by the good brothers at Earn Your Leisure and the good brother Ian Dunlap, the Master Investor. Do your own research. Our content is intended to be used and must be used for informational purposes only. It's very important to do your own analysis before making any investment based on your own personal circumstances. You should take the independent financial advice from a professional in connection with or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. Please do your own research. And shout out to everybody that pulls over in the street and says that to us.
Yeah. And it's UNEST, UNEST.
There we go.
That's the one that he was talking about. All right, Ian, the floor is yours.
Perfect. I appreciate you guys so much. I'm gonna need some kale chip wrap snacks.
Shout Shout out to Cardi B. She's on the. She
got like 4 bags.
I need a bag.
All right, let me know if you guys can see my screen.
Yeah, yep, we see it.
Get your pen and pad ready. I'm not going to play with you today. Let's get right to it. The 33 secrets that you need to know to be a great investor in the market. Disclaimer, do not copy, remix, reproduce my material without express written permission by me. I love you guys. Don't remix my material because I don't want my lawyer to, do what he has to do. Subscribe to my YouTube. Just look up Ian Dunlap and then go to joinredpanda.com for exclusive content. If you want to join the stock club to get the greatest entries and picks on the planet, you can do so. You'll get the 4 best stocks for your retirement, the best places to get in and out, called by me, additional entries from the algorithm Athena, the best growth stocks to invest in, the 2 best places where to get into the market, 28 bonus picks on a year, a 10-minute daily call from me, and some of the greatest gains that you potentially could get hypothetically. Trading has considerable risk. Please consult your advisor. If I've made you some money from Stock Club, put fire in the chat, please. Now, let's not disappoint the Lord. Now, I know some of you asked for a financial blessing in 2021. Put yes in chat if you've executed. If you have not, please stop playing. After Market Mondays, we will have our Stock Club call at 9 p.m. Central for Red Panda members only. If you want to join, please join Stock Club. June 21st, for those of you that joined last year, who came across me through the fellas, you'll have a chance to renew for the same price of $297. Now, for those of you who are like, hey, can I get the same rate? Nope. Just for them, those who joined in March and April, you can join at the same rate. You're locked in, grandfathered in. Love you so much. And for those of you that have been with me for years, when it was $20 a month, you're locked in for life, so no worries. June 28th, we will have a Stock Club flash sale. I'm not sure about the price. No, I don't. It won't be super cheap, but the value is there. If you don't want me to limit these gains, I can't limit the price because I want less people in and more people in that are going to execute. So June 28th, get ready for that. The S&P 500 and NASDAQ hit all-time highs today. There's nothing else to say, nothing else to teach, nothing else for you to learn. Don't need more books. You don't need to go look at the galaxy and see how Orion lines up with Chichen Itza in Mexico. Execute and buy. That's it. The entire thing. You can close out after this. We don't close out for the views, but 2 tech, S&P 500 or QQQ, IWM, IWF, 2 index funds, and 2 technology companies. I love Apple and Microsoft because they provide safety. Okay? Write that down. For those of you who are new, 2 index and 2 tech. And the truth is, most of you don't want gains. You just want to gamble. And some of you have even gotten off the gamble coins that have been out there. But if you want security and safety, this is one of the easiest plans that you can follow. The hardest part about it is most people never follow a plan consistently year after year or week after week when it comes to investing. The top lesson from last week's episodes, kudos to Jorge, who's in Dream Team now because of his win. The formula for explosive gains is this. You need a high amount of shares in a company that you love or have a deep conviction in. You have to hold it for a long period of time. Luckily for him, it didn't take that long, but you have to hold for a long period of time, and then you need a high volume stock that other people are behind. Please write that down, because what sucks is when you get into a move and it has a tremendous run and you don't have that many shares in it. So these are the 7 lessons. I talked with a brother this past Saturday. Stock Club members, you guys will have that in about a week or two. And he made $230,000 on AMC. Lesson number 1, super concentration. He only has 6 stocks in his portfolio. Truth be told, you cannot do an adequate amount of research on 29 assets in your portfolio. You can't. 6 maximum. 4 is ideal. The fewer companies that you have, the deeper you can go into them and understand them a hell of a lot better. Please put 6 in chat. Lesson number 2, he bought it in August. So before the hype kicked in on AMC, because he works in the music industry and he's a business owner, he goes around to a whole bunch of cities and he was like, I remember what it was like prior to COVID. So unless they absolutely go bankrupt and go out of business, I know at some point this stock will revive and come up a little bit higher. So he did actual on the ground, old school research and compared the data of how many people went to the movie theaters before and now that the country is opening back up a little bit to what it could be now. Lesson number 3, buy a large quantity of shares. Once a company has met your parameters and your expectations, you have to buy a large amount of shares to make the investment worth it. Lesson number 4, I think he started thinking about the position maybe a year prior. He's only been in it since August, not even a full year, but he was willing to hold it a year to see if it would even get to a point where it would break even in his favor. One of the biggest mistakes I see a lot of people make, you guys want to flip too fast. And it's often because we made bad money decisions prior. So now you want to erase 10 or 18 years worth of mistakes in 2 years. No. What happens is you'll hold something for a year and it'll take off and it will build your confidence to then follow a system in other areas of your lives. When it comes to money, money is all about systems, automation, and having an elite edge in something that other people don't have. Please put elite edge in chat. Lesson number 5, he used the previous high going back to 2016 of 35 as a potential exit price. He bought in at 4. So even if it never shot up to 70, he got in at a good price. And then almost had a multiple of 9. He's risking 1 to potentially almost make 9 on the investment. Is that a good risk to reward ratio? I'll tell you guys, minimum risk 1 to make 5, 1 to make 10, 1 to make 25, 1 to make 50. This is a good risk to reward parameter. Lesson number 6, change your mindset from working for money to letting your money work from you. If you're always saying, man, I'm tired of working and I'm tired of having to give all my time in exchange for you, once again, you have to let the greatest set of entrepreneurs to walk the face of the earth ever work for you. Are you better than Bezos? Are you better than Tim Cook? Are you better than Steve Jobs when he was living? Are you better than Elon? You have to factor these things in and say, if you're honestly not better, or even in this case, do you have better systems, infrastructure in place and an edge in your company versus another? If not, you need to invest your assets into those companies in which can win for you. And lesson number 7, you can make trader money from long-term investing if you have a sizable amount of shares. Everybody want to drag you down the lane of investing, and then I trade futures is what I do. I'll arguably bust damn near anybody's ass when it comes to trading, right? Anybody can lose. But the real leverage is to have the money and assets working for you. All the big money is in long-term investing. Here's how you know. You never see anybody that has a net worth higher of $50 million talk about actively trading, with the exception maybe of Paul Tudor Jones and maybe 65 other people. Type in chat, let the money work for you. If you own the LA Lakers right now, and I've talked about this before, if you owned, or if you had the chance to own, shout out to P and Migos album came out. If you had a chance to own Quality Control, would you own it for one day and trade it, or hold it for 10 years? I get so frustrated with people taking you down this aisle of saying we're all trades and you can make more money, but the downside risk, because if you're wrong one time and it skips your stop, then what? We have a parabolic day and we bleed down crazy and the volatility is incredibly high. Your broker may not even be able to answer your phone call. Go ask them if they're free first before you take advice from anybody. You don't got to listen to me because I'm good. Red Panda, Dream Team, good. Sniper's good. Execute. If I made you money, put yes in chat. Malls will adjust to becoming mixed use spaces over the next 4 years. So you know, Forever 21 is dying a slow death in this. I've been a lot of slow singing and flower bringing for some of these retail companies, right? But they will start to use that space as commercial space, office space, and they'll get a lot more creative in some of the things that they'll do. I won't touch on this deep, but Russia has dropped the US dollar. Initially, it was a tax on the election. But we all know, in order to win a war, And at the end of Against All Odds, rest in peace Tupac, rest in peace Afeni, he had a quote. He said, "Now I have my money, right now I want war." In order to engage in war, you have to have a monetary edge on your competitor. This is why I kept telling you guys, if other assets that we are being driven into are not American, what downside risk does that have for us as a country and an economy? I won't tell you my theory on air. I told some of you privately. But if another entity and there's another asset owned by another country becomes the most popular asset to trade and invest in, what would that do to the dollar? And also, if electronic vehicles become the standard and then we come off the dollar because of oil drops, then what happens to us? Death will be delivered. But everyone loves crypto so much. You have to think deeper. There's a game inside of a game. And if the VIX hits $10.89 this summer, oh baby, we're going to have an aggressive slides. Please start marking off the places in which you need to buy the companies that you love right now. And this is the big secret of all of investing that no one wants to accept. The actions that you've taken over the last 3 years have gotten you exactly where you are today. That's it. No debate. If talk is cheap, why is everybody so engaged in debating? Because people want to be seen opposed to being rich and wealthy. You got you here. So if you don't like yesterday, my review process to get ready for the week was to watch 89 videos. That's me already knowing what to do and what my thesis is. If you do not like where you are, change the action that you take on a daily and weekly basis to get an edge in the market and your business and to have freedom. If you like where you are, please continue to find ways to add an advantage to what you're currently doing. Red Panda Stock Market Study Blueprint. I want you to study the top 20 futures every single day. Study the top 50 stocks based in the US market. I want you to study the top 51 through 300 after that immediately. And then most importantly, invest in 2 index funds and 2 tech. Even in downside risk, quote unquote rotation. So it was meme stock, crypto, consumer cyclical, banking. If you're not actively looking at the market 8 to 10 hours a day, you're not even going to be able to see when the rotation begins to happen and marking off your prices in advance to know where to get in. And then when your tech is bleeding, everyone's telling you, well, the hedge funds are now rotating into palladium. No, the indexes will give you a hedge because you have diversified assets in your portfolio. And then when they go back up, as they did today, you can participate in an upside swing of the market. Stick to your plan. And the higher your execution is, the lower your hate and envy for others will be. The people that are winning and that are making money, no issues. You notice all the traders, investors that are really good, they all get along. And then the ones who are not good and the gains are not there, always a rebel rousing. Stay focused. Your execution in these next 2 or 3 years will determine how things go for you in 2030. Jerry had a great question. So do the trades have little to no drawdown when you get in them? Does a good trade almost immediately go in your favor? So when I'm trading the futures market, I used to have a rule of 7 seconds. If it was not in my favor, if I was not in profit, I would look to get out. I've kind of extended that to like 20 seconds maximum. But when you're in a good trade, if you traded ES today and you're in a sniper group, on average, how long do you need to know before a trade is working in your favor? For me, that 20-second mark will be a great gauge. But when you get into a good trade, you immediately should see some positive profit in your favor. If a trade is staying at break even or slightly negative for a minute to 3 minutes, I know the trade is not good. That's why I'm so focused on timing. Top of year, end of year trading, Monday, Friday trading. You have to know what cycles which have the most volume. But for me, for sure, when I get to 20 seconds, if I'm not in the positive, I'm looking to lock in profit and get out with a little bit of profit to prevent from losing or getting out of the trade altogether. How to use Fibonacci tracements for entries. If you want me to do a full tutorial on this here on Market Mondays in the next couple weeks, put yes in chat. But I will say, use the time frame that I gave you to look at the stock and draw from top to bottom. And one area that you can get in is off the 23.6. I wish I can give you our levels in the dream team. I can't, but if you want me to do that tutorial for you, I'll spend an entire episode on that. What's the best way to determine entry and exit prices for stocks? We went over it. Go look at the Mark Cuban episode. I swore that I would never talk about the indicator again, so I won't. Go look at the Mark Cuban episode, but then you can use the 72. You can use the 200, the 50. You can use the 10 EMA. Great. And then also you can use VWAP for momentum. What are your thoughts on crypto being adopted in South America? I think it's a potentially innovative way for a government to get a financial edge. My thesis is the same, though. You should only have 1 to 8% of your net worth in crypto. What's a good entry for MGM? Stay tuned to the end of the show, and then I'll give the entries for MGM and a few others. What's a good entry for Baidu, and what are your thoughts on it? My thought on it is I don't love Chinese company as a primary asset to invest in, but I'll give you the entry towards the end of the show before we wrap up. But I like American companies, in particular American tech companies, more so than Chinese. What should be our second entry point when we're trading futures? This is a great question. So now that the summer is here, the volume is going to be a little bit lighter. And I was talking to P and Dom about this earlier, but you have to then, if the market consolidates, write this down. If the market has less volume, or we're more quote unquote range bound, you have to use a shorter target. It's not about another entry. Use your same entry point, but use a different target. That's why I tell you guys, whether the market is going up a ton of points, only going up a little bit, or going up somewhere in between, you have to have targets according. But you can use VWAP as a secondary indicator. You can also use Golden Cross. Let's say use a 10, or let's say 14 EMA paired with a 20, or 14 with the 50. If it crosses above, you can look to go long, but it's really about having one target that will work in short conditions, one in long conditions, and one in mid range. Do you read 10Ks when researching the market? Never. For the companies that I love, the 5 companies that I love the most, and I've talked about them ad nauseum here, yes. For everything else, no. Technicals now have become a visual representation of what the fundamentals are. I don't go through the 10K, but just because I don't do it doesn't mean that you shouldn't. So regarding Apple, Microsoft, and the 3 others that I love dearly, I've tried to read every article that I could, at least since 2000, about it. So I know the company front to back, usually. If you have not read a 10K for a company that you love, you probably should. A few of you had a couple great questions, and kudos to you on Twitter who asked me about Benner cycles. It's not enough time today to go over it, but next month I want to go over it for sure. But I would tell everyone here, begin buying every book that you can on Benner cycles and look at the 20-year cycle more so than any other to see. You'll notice something, however, there is a resistance point or an area of like maximum optimism, which is at the top. And then you have a bottom layer of maximum pessimism or support at the bottom. And you can see which years in which things begin to turn over or could. And I know people often say that no one knows what the market is going to do or doesn't have a crystal ball. I do. But there have been people who have predicted when things are going to crash years in advance. And I'll show you an example later. How did you know that the price of Tesla and Bitcoin were going to drop in advance? When I say you need to go look at the market every day, once you're looking at the highs and lows, so I know for a fact, when Tesla normally hits a all-time high in normal conditions, it's going to drop 50%. That came from me doing the work. It's not something that I read. Then the crystal ball, the spots in which I want to get into the market. I saw how high it was, and I thought this was going to happen 6 months ago. Remember when I was saying, hey, I think Tesla may drop down to 394, and everybody was like, yo, he don't know, he crazy, it'll never go. And then it took off, right? And I was like, yo, I was wrong. It didn't drop. And I'm still pro Tesla, pro Elon. But the people who were saying he doesn't know hadn't invested in it. If you were invested in Tesla pre-2020, it was a hard thing to see. And that's why it was very hard to put more than 10 to 20% of your portfolio into it, because the drawdown of 50% was too heavy. So this is experience. So I'm like, okay, they haven't lived through the cycle. The experience of looking would trump any noise that's out in the marketplace and out on social. So when I go through and mark my prices in which I want to buy, and those are the same prices that I give to the stock club, it was an easy correlation to see that it could come down to that place. The easy answer is just looking 8 hours a day at the market. I wish I had an easier way for you. How do you deal with the emotional aspects of trading? Literally just trading Monday, Thursday, and Friday and sticking to 8 trades maximum per week. Now I may practice more than that, but write this down. 8 trades per week live will give me peace. That's all you need. You guys can debate and do whatever you want to do. I don't care. You can do whatever the hell you want to do, but you have to limit the number of trades that you take and only trade during prime times. Because now when you're bleeding past prime time, the market that was there in 2020 is not there now, especially in a consolidated market. Trading now is really a game of discipline, and the men and women that are most disciplined are going to be able to win the most. And I need you to know that silence is a superpower and the second best indicator. Time is the first. So I know some of you want to learn in group format and have accountability buddies and all that. I'm telling you. And I asked a brother today, and I asked somebody in Stock Club, I'm like, I've made some of you $1 million out of Stock Club. Have any of you that have made a big amount of money in Stock Club sent me a check for half? And the thing with accountability partners is if they cause you to lose half, they're not going to cover your losses. Silence is a superpower because you get to go through more material, review more, and that's the way you're going to end up developing your edge. If your discipline is low, use a higher time frame to trade off of, like a 4-hour chart. But if your discipline is higher and you're only sticking to 6 to 8 trades per week, no matter what, you can use a lower time frame, like the 20-minute. This is an exclusive 40-second chart, or you can use Renko Dream Team. I'll go through how to use Renko, but you already know. And shout out to Jamal, who, even though I looked at the time frame before, I'm gonna give you credit because you brought it last week. That time frame is fire. What are your thoughts on the inflation story? My main thought is it's the number one reason why people should invest. Everything is getting more expensive. We've seen that throughout history. The value of the dollar drops every year in comparison. You need to put your money into things that are going to make you more money babies while you sleep, because things are going to constantly change. And that's why I always tell you, you have to know what your freedom number is, not just for when you're 58 or 63 or 70, but you need to know that number so you have something to work towards every single day. Because when disaster strikes and disaster comes, is not at the most convenient time. Have you ever noticed financial emergencies come frequently when you have no money? The inflation story won't be important. Just like last year, everyone was like, yo, are we in a V recovery or a W or a U? None of it matters. Invest in them all. I'll tell you the same thing. The inflation story won't matter in 2 years. But if you put money into the market, it definitely will. We don't want to overtrade, but we want to perfect our edge. How do we consolidate the two approaches? 300 practice trades. When you go live, only 8 trades maximum per week. And then you need to know, in order to hit your goal, how many trades do you need for the year? Will there be moments in which you may have a flash crash, or you may have an incident like where oil goes negative and you may be able to short it? Yes. Will we have an episode like Brexit or August 24, 2015 that I talk about? Yes. You may want to add some trades there. For those of you that are in the sniper program and dream team, you may want to actively trade the natural gas report and crude report so you get more comfortable trading volatile sessions. That's why I always told everyone, practice the NASDAQ, because if all hell breaks loose, the Dow, ES, Russell, EMD, the Nikkei, Japanese yen will all move in that same kind of speed. You have to practice with that kind of pace first. But regardless of what the desire is, once you're trading live, you have to stick to your number of trades for the year. What are my thoughts on Doge and Shibu? I give prices towards the end of the episode. But here's a site where you can know what people are buying from that I've not talked about before. Write this down: wallmine.com. wallmine.com. I have no affiliation with, but I played around on the site for a couple hours and I liked it a lot. Nvidia is up 167% since the launch of the stock club of last year. So even though AMD is having some issues in terms of supply, and a lot of places are having supply chain issues, Nvidia has done incredibly well, and anybody who's a gamer understands how important Nvidia is to the ecosystem. Even with everything that you know, do you still make mistakes in investing and trading? Absolutely. I would argue when investing, no one can ever be right 100%. If you get in a good trade, you never put on enough size or enough shares. If you are in a negative position, you put on too much. And trading, I mean, there's always hundreds of mistakes, because when I'm looking at 16 assets in total, I'm always missing a move on something. And consider this: if you trade like a 4 hour, 1 hour, let's say 20 minute, 10 minute, and 1 minute, which 1 minute is absolutely horrible. So don't use that. At some point on some time frame, I'm going to miss a move. Now multiply those number of time frames times 16 assets and look at all the possibilities in which I could have missed a move. There's always mistakes that are made. That's why you have to know what your numbers are, so you can have some kind of peace and solace in knowing, okay, this is my benchmark. I hit it. Here's where I could have improved. But never, even in 2020, I did fantastic in the stocks that I invested in. I could argue that I probably should have invested. Truth be told, I should have went negative and invested in terms of debt to investment ratio. I probably should have borrowed. I should have put every dollar that I had into the market and probably borrowed 500,000 and put into the market. You make the assessment about risk parameters. I get it, but hindsight is always 20/20. Like, you can drive yourself crazy at the things that you missed. And that's why I always say, like, I hate that I missed Novavax and Overstock. Like, I did great on Moderna. Kudos to everybody in Stock Club who's in Moderna. I'm in Shopify and Tesla early, like, but there are still things that you missed out on. How often do you review your recorded trades? Once a week, normally on Fridays or Saturdays. You should do the same. What are your thoughts on Intel and Ford? Ford, I don't love the electric truck. I think is amazing. I think Intel is probably a third or fourth best player in the space. They've made a tremendous comeback, but most of that comeback is from people missing out on AMD and Nvidia and TSM. I lost on PBI. What do you think about the fundamentals and the technicals? I need to know more about this, but Pitney Bowes, I would tell you this from seeing your comment, brother. I would stay away from as many message boards, Telegram, Discords as possible. I would make a watch list from them, but I wouldn't have anyone else tell me when I should get in. You have to be able to do your own fundamental analysis and technicals and make sure they match. But Pitney Bowes for the longest time have been dropping. It's not a good company overall to invest in long term. And this is the secret as we wrap up. You should invest 50% of your money and use the other 50% for expenses. And let's call this a silver standard level of personal finance 101. But if you want to go Super Saiyan and go crazy, you should invest 90% of your money and use the other 10 for expenses. That when that lifestyle creep comes in, I know we all want to look good. We want to look, attractive to the opposite sex and all that. Like, there's a lot of reasons in terms of ego as men, why a lot of people invest in depreciating assets or liabilities. But to have the true freedom that you want, once you have a model that works, you should put 90% of your money into it, at least for a couple years. And I posted this in 2017. Harry Dent has a book called The Sale of a Lifetime. And a great part of this is he has a system based on cycles, and all 4 of the cycles pointed down in 2017, which predicted the 2020 crash. I know people always tell you can't predict the market. I've shown here for a year and some change that you can. But go look at the assets and the people that, and now Harry's been wrong on other stuff, but you need to look at every source of information if someone is telling you that a crash could come. And it's not a reason to get out, but also if you know a crash is coming, write this down. It is an opportunity to buy great companies at super cheap prices. When companies in like the S&P and NASDAQ make all-time highs, that's when you need to go look at the prices you'll buy if everything falls apart. Not when it's in a down cycle. It is too intimidating during a down cycle to do it then. How do you invest in a company like Microsoft that doesn't have deep dips? This is a great question. You need to go look at the weekly chart, mark off where you would get in, look at the daily chart, look at where you would get in, and then if you don't have a move there, go to the 4-hour. If you're using any combination of EMAs, let's say 200, 150, 72, 20, it's going to drop to one of those spots. I wish I can give y'all my crystal ball, but I haven't. If you think I should turn a crystal ball into an app, put yes in chat. But that's the way you're going to be able to build your positions. And even if you get in off a 4-hour and you're looking to hold it for 7 years, 5 years, you'll be golden. Remember on an episode with Mark Cuban, he said he's only investing in companies with great AI. So Microsoft, Apple, Google, Netflix, those are all examples. I want you to make a watch list of 10. Just Google technology companies with great AI or artificial intelligence, right? And then you can make a watch list for 10 of the ones that you like the most to invest in for the long term. Cybersecurity will become even more important. And also, if they begin to store DNA on hard drives, as we talked about, the bio warfare and things that could happen poses a considerable threat. So you got to add cyber, CIBR, to your watch list. Hack. And of course, last year when Trap was on, he mentioned CrowdStrike, which is probably one of the most important in the space, hands down. And Cuban also in that episode stated to read 5 hours per day. I'm telling you, it is an edge. Some of you have been asking me if I don't like to read and I can't go through 5 hours, what should you do? I will go through 10 chapters a day on Audible. I would definitely do that. And this is the final lesson that I want to teach you. Learning is more important than teaching. Having a monopoly is more important and better than having competition. And systems and automation trumps everything. Systemize your process for how you're going to invest in the market so you can have your edge. And I saw this from John Carlton this weekend, and I thought it was important to point out. And he says it's a myth that working hard will get you anywhere. It's working smart according to what your creative brain requires that makes magic happen. Life should be enjoyed. Money merely supports that essential premise. And we've talked about the golden rules of retirement, like only working 4 hours, spending 4 hours with your friends and spending time with your family, only being around the people and things that you love the most. You have to have systems and automation. So you want to work hard at first to build your automations and to know the systems that you need in place. And then you want to begin to automate them as much as possible. I want to say this lastly. I love you dearly. I want to see you succeed. I want to see you win. Investing is easy if you follow a plan such as to index, to tech, and just add to them and don't touch. I would also even say you probably should only look at your portfolio once every 3 months if you're not disciplined. I keep telling you, a lot of you got tricked into trading and doing more risky things. Does risk have a place? Yes. Only allocate 10% of your capital for anything risky. Put it in chat because I don't want anybody to say I didn't say it. Only 10% of your capital should go into risky assets. Because what happens is you'll get a win and then you take all of your money out of your long-term investing. You put it all on the risky asset. And if any of you have gambled or been to Vegas or been at a casino, you know you really need to stick to around maybe three hands at the table and then walk away. But some of you are getting in on a 4th and 5th move and then the run is over and then you're destroying your financial future. Don't do that. I want to see you win. I love you. There's nothing else to teach. Execute, to index, to tech, buy every month, buy a whole bunch of shares. If you're not a better executive than the people that run these companies, let the greatest CEOs that have ever walked the earth work for you. And if your company isn't better than a company that you're comparing your portfolio to, invest with them. That's it. I love you guys. Over and out. That's it. Love y'all.
There you have it.
Outstanding.
There you have it. There you have it.
I think that was like the Steph when he put up like 60 in the 3/4. They wouldn't let him back in the game.
Listen, remember when Hov went up and did the Funk Master Flex Grammy family freestyle?
Keep going.
Yeah.
Yeah.
Been crushing the building since Outside Socks. Love y'all dearly. If y'all enjoyed it, put yes in chat. Love y'all dearly. There's nothing else to learn. No, okay, well, I know some of y'all gonna ask for a book, so let's go through Charlie, who arguably is better than Warren. Arguably, it's the last book you probably need to read, need to execute. No debating, because when you turn 68 or 63 or 49 or 52, and it's time to provide. What Kanye say on a college dropout? Shout out D-Ray. Like that knowledge won't be able to pay the bills and stuff that you have and be able to take care of the family of yours for 5, 10, 15, 25 years. Execute, man. That's it.
No, that's a fact. Please hit the like button if you like the content. That's what the like button is for. So please.
That is fire. Y'all better go like that.
Say the name of it for people on audio. It's the Almanac.
Oh, Almanac? So yeah, Poor Charlie's Almanac.
Poor Charlie's Almanac. Book tip of the week.
Almanac with a K at the end.
Oh yes. Book tip of the week. So
the 3rd edition.
A lot of times people ask what book should they read, and a lot of times people ask for book tips. So that's a book tip.
Read and then execute.
Reading is fundamental. That's a fact. Okay, appreciate that. So let's do this before we go to questions.
Yeah.
I have some questions on myself that I'm sure other people might be interested in the answers to. So yes, stock market has hit an all-time high.
Oh, baby.
The NASDAQ.
Yeah.
Well, the NASDAQ
and S&P.
And S&P 500.
So and the Dow Jones is not far
no.
from its all-time high. So pretty much stock market's at all-time high right now, pretty much. Safe to say. So I know people is going to be saying like, well, is this the time to sell? That's one question. Is this the time to sell? And do you see a correction coming before the year is over? A strong correction coming. So I'll let both of you. I know you look at charts a lot, Troy. So
strong correction.
What's your charts telling you?
I anticipate a correction at any point. Like I said, everything's at an all-time high. I've had a cautious mindset since talking to you every day. And so I prepare myself before I invest in anything. So I'm always looking for a correction. But I watch this Fear and Greed, like Ian said. I'm checking the VIX as well. And so when he said 10, I'm like, ooh, right. And that was one of the things that I had in mind. I'm like, what would be a comfortable VIX number? I think we kind of said anything between 15 to 20 would be comfortable. If it gets to 10, be careful. But these are the indicators that we're watching. And like you said, the index can be a hedge, right? So if we see that the index is falling, you should be ready, right? You should be ready, and you should know where you're going to exit. I think somebody said that there's always a point in investing that people should look out for. There's 2 points, actually. When you hear people say, when should I buy? When should I buy? When should I buy? The next thing they're going to be asking you is, when should I sell? When should I sell? When people start saying that, you know something's happening.
Ian, what's your thoughts?
You should buy and hold for 30 years. For those of you that have been watching since last year, you know the song and dance. For those of you that are new, your homework is to go watch the episodes from last year. Last year was one of the toughest times, and I know hindsight would make you think that it was easy. Was not. Hold for 30 years. Will a pullback happen? Yes. June, July, August. I told you guys last week to go do the homework about the summer, since people are back outside partying.
I told them, man. We told them. They ain't listen.
June, July, August will present some opportunities to buy long term. Will we have a huge crash? No. Unless the Federal Reserve stops printing money, there will be no elongated Great Depression kind of crash. Everyone always focuses on the Big Short, and Michael Burry is arguably one of the greatest investors of all time. But if you only focus on shorts in comparison to longs, you'll probably miss out on quintuple the amount of return that you could have got from that same Big Short. The big long is not as sexy, but that's where all the money is.
Pause.
Yeah,
Please.
Pause.
So, Jesus Christ.
I'm just being, listen.
Yo, moment of silence. Shout out to New York.
So if you want the eggplant returns, no, but I'm just being for real. Like, everyone's like, yo, I'm gonna short the market and catch the top. That sounds sexy, but he had clients. You have kids to take care of. And also, if you're not putting in 8, 12, 13 hours a day, and anybody who even trades, they'll tell you, like, if you're going against the direction of the market for 500 or 600%, why? When you can catch more on the upside. Like, my stance on crypto has not changed. The thing that I do love about the community and Wall Street Bets, the diamond hands and whole long term, like Buffett says, and it's the same concept.
Yeah.
Hodl and hold for 30. It's a different asset class.
Yeah.
So yeah, we'll have a little pullback. And for those of you who get out and sell any of your long-term assets, it'll be a tremendous mistake. But do what you want to do.
Big news today, obviously. I'm sure most people saw it. If they didn't, they caught Paul Tudor Jones on CNBC, and he was he was talking about the Fed meeting on Wednesday and the importance of it. And if they ignore like everything is okay, then this is a sign that we should be investing in tech.
I've been telling y'all.
His prediction is 20% increase. That's pretty aggressive. So I'm interested to hear your take on it, and then we just open up a discussion.
Paul Tudor Jones is the Michael Jordan of futures trader, hands down. So I would never say anything to go against him. I'm arguably Kobe though. So number 8 and 24 healthy with the stem cells.
I do say so myself.
No, this ain't back in the day, right? I'm just being real. Like, so, but if he's telling you tech, if he induces you to do it, like, you think we're going to get back to writing shit on loose leaf? Like, most people don't even know, kids don't even know how to write in cursive. I don't think. And then also from an inflation standpoint, let's say if we go to 6 or 7%, the only advantage we will have is fintech, banks, and then tech with a considerable edge. I know everybody's like, yo, Apple has no room to run. When you have $1 trillion, it's a lot of companies you can buy. Mm-hmm. Some of your favorites. Who's to say they won't go snatch up HBO Max, or it's a lot of money to play with. So everyone go check out the interview on CNBC. Stop worrying about inflation. Yeah. Stop worrying about short-term horizon. People do that for press, to sell ads, and to get attention. Like, stop falling for the same trick month after month and all this hype. Kudos to Prudent Mom, who I saw in chat, says she's been in VTI for 10 years. Hey, put in chat how long, how well you're doing off that. Just invest for the long term. Like, if I am your competitor, which I'm not, I'm your brother, your advocate. But if I was your competitor, I would do everything in my power to make sure that you would stop investing. Yeah, that's the trick.
So when obviously when they talk like that and they hear inflation, people start thinking, well, if it does happen, well, what type of trades I should be in? And so I'm just thinking from a consumer standpoint, spots like Alibaba make sense to me. Amazon obviously has always made sense to me. Facebook, all these type of places that you can use as a barometer to say, all right, if inflation happens, all right, this is the next place. You got any other positions that you think would be a nice spot?
Here's a formula, right? Because I'll get into my full formula one day, maybe in a year, because I don't want y'all to copy my ass, because you know how I do. But whatever the inflation number, you need to look for companies that consistently give a multiple of 3, whatever that number is. So inflation, if inflation goes to 9%, the ones that I'm in are going to print higher than that anyway. So that's why I tell you, go look at the 20-year. So you want to know everything good and bad under good CEOs. I know if Microsoft loses their CEO and they get a volatile executive, as Ballmer was, I know they'll probably be flat. If they have a great CEO who's calm, collected, great upbringing, the upswing is there. Microsoft built the base for a long time. If Tim Cook leaves and let's say Elon becomes CEO, Apple will fall flat. It would do the same thing as Microsoft, but I would hedge and then understand how long I want to build my base. So when that 10-year, when it bumps up, we're good. That's why I keep saying, if Tesla gets a Tim Cook, and let's say Elon goes to chairman and they find a Tim Cook, $1,500 price target for Tesla. Because then the street will get behind it, the funds will get behind it. Then now you can't put Tesla in a pension fund right now because of the volatility. So the ones that I've proactively been in, Apple, Microsoft, Nvidia, VGT, MGC, Shopify, the top 10, they're going to take care of that. But last year was, W recovery and U recovery. And last week or last month, it was Doge. It's always some obstacle in the way. The asset that you're invested in should knock all that shit out. Good asset you want. I've never went to sleep and invested in Apple or Microsoft. I'm like, damn, I wonder if inflation's going to take my edge away. You don't have a good company if that's the case. So I know you guys want something sexy and something new. The top 10 that have been running the world, keep adding to aggressively. Or do what you want to do. But if you want results, you'll follow.
Yeah, and that's something that we all talked about it before. And Josh Brown, I remember Josh Brown was on. We gotta get him back on. But when he was on, he was saying that he thought like around the summer stocks is just gonna start taking off. And yeah, a lot of times people was nervous when stocks fell, especially the NASDAQ. It fell pretty substantially a few months ago, all the way up to like a couple weeks ago. But
it wasn't that hard of a fall. Even like Franklin Dynatech that we talked about on episode 70. If you guys haven't seen it, like that's been booming. Like quality stocks are going to rise. Like people want, and because of crypto and because of trading, people think that a multi-billion-dollar company is supposed to print 14% a day. That's not real.
Yeah, the Dynatech. I had spoke about the Dynatech. Your episode, even before your episode, because when I was putting clients in a Dynatech fund for years, and it's one of these things like QQQ. I really like. Yeah, it's all the technology companies. So, if we're gonna invest in the future, you have to invest in the tech. So that's not to say to every single investment should be technology, but I think that it's only common sense that, of course, all of these companies, Google, Microsoft, Apple, they're leaders of the pack, and they're going to continue to lead. So it's not hard to figure out why it's at all-time high right now.
Throw a dart.
Not too complicated.
Yeah. And we spoke about some of these plays, even in the tech field. We just spoke about Salesforce, and a few months ago it was at 207. Right now it's at 246. Right, we've been speaking about it for 6 months already. Same thing with Microsoft. I mean, we've been saying these plays, and it's just like, if you wanted to know go back and listen.
You notice how like record labels have rollouts, and then like so Migos came out #1. Congrats to them.
Culture 3.
3 months, Lil Baby come out. P's gonna profit on both. Just do the same thing in your portfolio. It's not rocket science, but when you have 43 things in your portfolio, it becomes really hard to manage. The same thing as having kids. Like if you have 9 kids, you never have control of your life. Kudos to my parents for more than one, because I'm tired all the time with one. Hey Xander, go to bed. But man, if you just have a few that are concentrated and you know what the edge is, I can make the argument, and some may argue it down. Arguably, Apple and Microsoft in the tech space, without them, other apps can't even function. Okay, let's say all y'all hop on Tinder. Apple goes out of business. How are you hooking up? How are you getting your food delivered through DoorDash and Instacart? They are the ecosystem.
Yeah.
Yeah.
Who actually brought that up? They had the CEO of Snapchat on, and they were questioning about the 30% fee, and he was like, "I'll gladly pay it. I'll pay more."
It's a great VIG to pay. It's for exposure.
Exactly. Our company doesn't exist without Apple, and so whatever the fee is, I'm going to pay it, and pay it proudly every month, every day if I have to.
But that's why I like chip stocks too, because you can make the same analogy with chips. Nothing is moving without computer chips. When there was a shortage,
microwaves, cars,
everything we use right now. This camera, the computer, the microphone,
the whole world, everything. Yeah, everything is moving with computer chips. So when there was a shortage of chips, and that's why when the Senate they passed that bill, right?
It passed the House. I think
it's on its way to the Senate.
Yeah, it's on its way.
How much? Like 40 billion, something like that. It was a lot.
Substantial amount. That's gonna be big.
Yeah, I mean, chip stocks to me, it makes sense. Not Rap Snack chips. Shout out to them.
Shout out to Rap Snacks though.
But
slight plug.
Yeah. Chip stocks, they make a lot of sense to me. So a lot of times, you don't necessarily have to be a stock market genius to kind of figure these things out. It's like, what are we using every single day, and what are those companies, and then what makes those companies run?
Yeah, and I did that.
It's the ancillary.
So I started doing the research on all of them. So like obviously Applied Materials and even Qualcomm, they had news today. I'm not sure. Did you hear about that, Ian? So Nvidia is still fighting to get that ARMS deal across, and if it gets canned, they're saying that Qualcomm might be the next semiconductor to actually pick up ARMS. And so I'm studying that, then I'm studying Applied Materials. I'm like, I'm just gonna put more money into SMH. Like this is too much. Like I'm just gonna play the safe route and have all of them just at a smaller allocation. But I want to go back to something that you said in discipline, and I'm gonna remind everybody because I actually had a small allocation in the options contract that expired on me, and I was like, oh my gosh, I had been doing so much I forgot. So witching is this week, quadruple witching. So June witching, obviously option contracts and future contracts will be expiring on Friday. So please look at your portfolios. Please make sure that you are out of your positions before they expire. Please do that. I'm telling you because it happened. It didn't kill me. It was a small allocation. It was actually a hedge on an inverted index, but it expired. And I had nothing I got to do. So please stay disciplined. Please make sure that you look at your portfolio.
And if the market tends to go up on Mondays and Fridays, and Tuesday and Wednesdays, the market normally drops. The days that you guys should be looking to get out is what day? Monday and Friday. That's why top of the year, I was talking to P and Dom earlier, like, yo, even the futures market is lighter. People are outside. Like, so there's not as many people inside, not as many people trading. The volume is still high, but not like last year. That's why the top of the year and end of the year matter the most in trading. The first quarter and last quarter matter the most. The middle times suck the most. Same thing as like trading top of day, end of day, staying away from the middle. You have to, and that's why I always tell you guys number of trades matter, because by the time June comes, if you're a trader, you should have hit 50 to 80% of your goal for the year. Then you can clean up fourth quarter, Christmas rally, be off to the races. So
there you have it, ladies and gentlemen. Can we go to questions? Some questions?
Yeah, let's do that. I'm gonna say this is Stefan. I'm gonna say Stefan.
If I dropped 81, let me know. MGM, I'll give the price so you guys don't press me for it. But
yeah, they're gonna hound you about the Doge. Don't forget. And I know. Stefan, what's going on? Unmute yourself. You've been unmuted. What's going on?
Yo, can you guys hear me?
Yeah, did I get it right, Stefan? Right?
Yeah, that's right. That's right,
Perfect,
man. I appreciate you guys. How you guys doing?
We good, man.
Good. Ian, I got a question for you. I talked to you a little while, some months back, and you mentioned scouring through the Russell 2000 for stocks. So I've done that a few times, and I just had a question though. So I'm going through, and for some of them, the charts look good, but the capital isn't necessarily that great. Is there like what am I trying to say? Like a threshold amount I should look for to determine whether or not it's good? Like if I'm looking at market cap or anything like that, I just don't know how to tell when I do that.
I mean, like anything that's less than $1 billion, I try and stay away from unless you have informational edge. But you can tell me which ones you're looking at, and I can tell you real quick price and if I think it's good or not.
Okay, I can go through a few that I just stumbled upon today that I wasn't sure of. There are, so I looked at one is APLS.
Yeah, it's good. Good acquisition price is like $24.54.
Okay.
It's a risky investment though, but yeah.
Okay. I got one more on here. And I'll try and get the rest to you later. It's a lot. I'm just trying to go through it and just pick everything out. But another one is DNLI.
Solid. You got to wait till like 27.59 though.
Okay.
Highest I would touch it is 47.16. You got to wait for a significant pullback.
Okay.
Yeah.
Okay, sounds good. Yeah, I just wanted to be sure as I'm going through all these things. You told us that a while back, so I've been going through everything like crazy.
I appreciate
that was it. I appreciate you guys. Thank you.
Appreciate you. Steph, where you from, man?
Oh, Bay Area. I'm out of Richmond.
Bay Area.
Come to the Bay.
Appreciate you, bro.
Yep. All right, thank you guys. Have a good one.
Hey, the Bay is representing at a different level. Every time we go somewhere, somebody's from the Bay. Like, y'all need to come. We coming to the Bay.
They rep hard. Yeah,
a lot of love.
You gotta come to the area. I'm like, okay.
A lot of love out there, man. Shout out to the Bay, man.
Kivo, we coming to you. Unmute yourself. You've been unmuted. What's going on?
What's going on, bro?
Everything good?
Feeling? Yeah, I wanted to holler at Ian, or maybe even y'all can touch in on. I'm focusing on the energy sector. Yeah, I want to know what's your take on uranium and the significance that it could hold in the near future.
You said uranium?
Yeah.
All right, man. I'm gonna be honest with you. I have no answer for you right now. But next week I will give you. It's not something that I've been looking at actively, so I want to get on here and cap like I have been. But next week, I'll have a take for you. But the energy sector has been booming the last year for sure. But I'll come back with a more thorough answer for you.
Yeah, I actually have, Kivo, I have a small allocation in XLE, and so I was trying to pick out all these energy companies. I said, let me just play it safe. I did the research on that, so the performance. And so if you look at the chart on XLE, man, again,
can you tell them what XLE is?
So it's the Spiders Fund's energy sector ETF. And so I'm going to tell you, if over the past 6 months to 8 months, we were down at 29, 27, 71. Today it closed at 55.14. And so again, a lot of times when we're trying to research these companies, man, and this is one of the things that Shadi is always telling us, look, go with the safest route, man. Choose an index or an ETF that has them, and you're better off. And so I have a small allocation in XLE. It's done pretty well. And so that's my 2 cents on it.
And when he says, just to give a further education for people that might not be familiar with the lingo, SPIDER, that's the S&P 500. So when we talk about the S&P 500, 500 companies, it's like a microcosm of the stock market. And in that you have different ETFs, which we talked about what an ETF is before, which is like even a smaller version of that, which is like maybe 20 or 30 different stocks, but it's specific. So you have a lot of the X's. So you hear us talking about a lot of the X's a lot. So XLK is the technology ETF of the S&P 500. XLY is the consumer discretionary ETF of the S&P 500. XLE is the energy ETF of the S&P 500. XLF is the financials.
Yeah. Keep going.
So you can as Trap says, you break that brick down to dimes. So if you can invest in the S&P 500, and then if you want to sub-invest inside of the S&P 500 and only invest in the financial companies in the S&P 500, then you do XLF. If you only want to invest in the technology companies inside of the S&P 500, then you do XLK. So that's another investment.
Biotech is XBI.
So there you have it for that.
Trap just actually texted us.
Did he?
Yeah, he just said it just now.
The main reason for me to even tap into the uranium thing was this big push on this electric thing that's going on with the government and everything. Just uranium pointing me in the direction of uranium.
Yeah, you kind of broke up a little bit, but I think we heard you as far as the but like I said, we haven't really done too much research on that, but it's good that you actually are doing the research on it and looking into the news and then looking to see what makes sense from that news report.
Right.
That's something I was actually talking about. I think it was Kenny Burns today. Shout out to him. Where once you start investing, you start to look at things differently. So even, going to a kid's birthday party last week, most of the people, probably 99% of the people in the kid's birthday party are just thinking about getting home or, not spilling, ketchup on their shirt. But me as an investor, I'm seeing that this place is packed. So that lets me know that those kind of stocks, like we talked about David and Buster's, things of that nature, Disney, that might be good investment. So everywhere you go, you start to look at things like, oh, this is actually who owns this company or who's behind this sector. And it really opens up, even on the real estate side, you drive past the neighborhood. And we talked about it before. Like I remember on the school bus, there's always like one house on the block with the grass is 8 feet tall. And it's not taken care of. So most of the time we just think those are just people that just don't care about their property. But now as an investor, that might be a distressed homeowner, or that might be a homeowner that actually doesn't live there anymore. They might live in Florida, but still own that house. So what does that mean? That means that you might be able to get that property for a lot cheaper because they might be under financial pressure, or they might not be there, or it might have been inherited to them and they can't maintain it properly, correctly. So your whole vision changes once you become an investor because you start to look at everything as an investment opportunity.
Yeah, one rabbit hole leads to the next. And every time you dig in the rabbit hole, you're going to find some more information that's just going to lead you to something that's pretty substantial. So shout out to you.
Thanks, I appreciate you.
Yeah, I'm gonna dive in deep, but great job for stumping. I've been stumped in a while, so great job.
This is a new name. Velda, we coming to you. Unmute yourself. You've been unmuted. What's going on? Oh, Velda.
Hello.
Oh, there. I
Hey,
wasn't
how are
saying
you?
nothing about you, Velda. I was saying that's a beautiful name.
Thank you.
How you doing?
I'm good. But I'm getting frustrated with not making positive trades and trying to understand options. I lost like $653 in option.
Oh, you almost. I thought you were gonna say 650.
Oh.
I thought you were gonna say 653,000.
I was about to go crazy.
I thought you said 653,000.
Oh man. Okay, Velda. Okay. Keep going.
And basically that's it. I don't know where to go for help. And I study and it's just not making sense with the options for me.
What are you invested in terms of the option?
I did FedEx and MOMN. I think that's what it was.
Okay. And you're down on both?
On MOMN. I lost everything.
It's one of the reasons why I tell everyone they should long-term invest first, because the desire for quick gains, like when you're trading, you have to consider the timing of it and then the level of competition that you have. I know you may be trying to make up for lost time. If you can shoot short your information, I'll put you in Stock Club for free and offset some of those losses and kind of guide you on a long-term investing, because I don't want you to risk what money you have.
Okay.
Trading.
So where would I find Troy's?
Velda, you know what I'm gonna do? Janet's here right now. She's taking your name right now. We're gonna take care of you. All right.
Yeah, I'll get you.
All right.
We're gonna take care of you, Velda. Thank you.
Thank you.
All right. Jan's got a plan. You know what to do.
Thank you.
Appreciate you.
Thank you. Appreciate it.
And I know trading is sexy, and I get it. Trust me. And man, when I first got introduced to investing, I felt the same way. I'm like, why would I only want to get 8% when I can get 150? What people don't tell you, you have to go look at the probabilities. Like, if you ever get the time to talk to someone who's worked in the industry, and maybe like even when Josh Brown comes back on, shout out Josh, and maybe we can get them on and say from the history of investing, how many people have won in these different asset classes, and then in the ways in which you can trade. You would be surprised. Like only 10 to 15% of people win in futures. 8 to 10% people win in options. Man, like you have to know. That's why I'm so big. Like you have to practice and know in every situation what the outcome is going to be. And if you don't have those trades in, there's no way you're truly going to know. So, and I know some of you are like, oh, he hating, he don't want you to get the bag. But I've talked to some people like that are down 400,000. So when she almost said 600, I was like,
oh man, I was prepared.
That's why we almost, and that's why I say like with quality companies, and everyone's always worried about a pullback. Like, damn, well, I'm in this. What if it drops? I'm like, but if you add to that position and add size, you can hit. I've known people that have hit 6 figures off of stocks that only go up 20 or 40 bucks in a year. You have to please go map out the prices of the stocks that you want. And then also, if you're going to trade, you should be trading the ones that you're also long-term invested in, because then you know the rhyme and rhythm to those individual assets as well.
Perfect. Corey Robinson, what's going on? You've been unmuted. Unmute yourself.
What's good, boys? Like,
everything's good, man. I hear you. Perfect
picture.
Perfect.
Congratulations, man.
Appreciate it, man. Just want to thank you guys, boys, for everything that y'all do. Got a quick question for Ian. So I was deep diving your IG this weekend, and I came across, appreciate it, bro. Came across a play where you were talking about
an investment
overnight play. It was a play for futures. So it was an overnight play. We were talking about same thing you talked about today, Mondays and Fridays. You know, we got our biggest chance of the market going up. You were saying placing a trade on a Thursday night and letting it ride until the open.
You dug back deep.
Yeah, I did.
You went back a couple years. Good job.
Yeah, 2018, bro. I was in there.
Yeah. You want to break it down for you?
Yes, sir.
You got to pick an asset that you know has constant movement in one direction. So let's say ES because it's the slowest of all indexes. And if you see that it drops down to, let me just pull up the chart. So hypothetically, if I'm looking at ES and let's say it was Thursday night, if the ES was at 4,224, hypothetically, and I was to buy there, if I know that the previous week's high was where it is now, 4,253, I would buy at that low and then let it run, because what normally happens is like the 5 o'clock session hit, you have some volume for an hour, and then we'll wait for the London session. Hopefully the London session will push it up. You have a drop right before the American Open and then right at the American Open. So hopefully through those 3 sessions, you could have got in from 4,224 and maybe hit 40 or 50 points. And then if you're, let's say you're doing 12 contracts, let's say you go for, let's just say 120 ticks with 12 contracts, that'll be $18,000 hypothetically. So once you get into the move, after you locked in profit, you have to let it run. Don't touch it. Go practice it. But yeah, it's one of the secrets that I like. You can also do the same thing from Sunday to Monday. If you buy in on Monday and we have a steady moving market to the upside or downside.
Yeah.
If we have a good crash, you can follow that same trend for like almost 24-hour cycle. And for those of you doing futures, that will count as intraday margin. It won't be technically a swing trade.
That's a bar.
Yeah, you have.
Appreciate you, Corey.
Shout out to my boy Ken.
Appreciate you.
Shout out to my boy Ken in Detroit. He just sent $300 to get the Velda. So I believe she said she lost $600, right?
Yeah, $653.
So what we'll do is we'll match that, and then we'll send her what she lost.
Yeah.
Well, so Janet, if you can get her her Cash App, me and Troy, we'll send her that, and then my boy Ken. And so, you know, we all make mistakes in life. So
yeah,
got off to a little rocky start with trading. So hopefully, you know, learned the lesson. We'll reimburse. So you'll be made whole on that.
Yeah.
And
get back in the game.
And learn.
Yeah.
Thank you, everyone.
You're amazing.
Oh, you're still on. Thank you. Appreciate you.
That's love. We got to take care of each other.
We got you, Velda.
Yeah.
Just pop back out of nowhere. Shout out to her.
Yeah.
Hey, real quick, I'm gonna just do the earnings report really quickly. We got a few stocks that companies that we've talked about, obviously, on Market Mondays. And so Lanier will be reporting on Wednesday. Shout out to the industrial sector. Kroger, the largest food chain in the country, will be reporting Thursday. And Adobe. You've been following Adobe, Ian? All-time highs. All-time highs. Adobe's on the run. And you know what else is on the run? I remember probably a year ago, we were talking about Adobe, but we were also talking about this other company that people use called DocuSign. They are on a tear as well. So that is our quick rundown of the earnings that we will be definitely watching for this week.
Yeah, those are some quiet companies. DocuSign is amazing. Adobe, like you said, hit that all-time high. But for those of you who don't know, it's at 556 right now. I'm telling you, tech space. And there are some quiet killers in there that most people don't, and Adobe's one of them. If you look last year, the low of it was like 257. Power of long-term investing, though, if you go back 5 years, it was at $94. So divide 556 divided by 94. Tell me what the multiple is. That's easier than trading. And also making money. Like, we've all been in good trade. And to all my traders, even if you're not a Red Panda, like, let me know this. Have you ever been in a trade with a stock and you go back and look 3 years ago and you're like, damn, if I would have just held that, I'd probably up 600%. The time part is like the key. So yeah, Adobe is absolutely amazing.
All right, we got a question that was sent in from Stacy Tyler. She said, how do you determine the proper exit for a stock? I'm interested to know that, especially on the downside. Sometimes we go negative on a position and we're like, when do we get out? So I'll just put that out there for everyone, I guess.
Truth be told, if you have a good one, you shouldn't. You don't think if Def Jam could have still had Hove in the contract, they'll still have him in the contract? It's the same thing. Like, and it's not the answer people want to hear. They want to hear it at 300% above or this line. But okay, let me ask everyone a question. You put yes or no in chat. Take any company that you love in your portfolio right now. Do you wish that you had it 10 years ago? That's a true test. That's a true test. Man, when Art told me to get Bank of America, he got Citi at 99 cents. 2008. He called me. Now, Art rich. Tom, you know, now I had bunny ears, but could have used more. Yo, buy this. I'm buying it. Didn't do it. He called me like, yo, I'm about to get out of these. I was like, hey, man, see what had happened was go back and look 10 years. That's a real test. Only, and this is the thing why I push this. I want us as a community to stop looking to flip, because if we really want generational wealth, we have to stop holding businesses and have to stop holding stocks for a short period of time, because we have to hold these things for at least one generation to actually have generational wealth. That's it. I wish I would have had Apple in 2001 when I was walking around IU and everybody in Jersey, New York had an iPod like it was a Rockefeller chain. Didn't know. I was like, damn, y'all got the iPod? Y'all balling. Damn. Jeez, y'all family got money in Parsippany. Right? Hold for long term. It's not the sexy answer. It's not the thing that's going to go viral. But in 10 years, when you see me and you're like, hey, I haven't had to work in 3 years. And you guys heard that was on the Stock Club call, heard the joy in Jorge's voice when he made 280 grand. That's in 1 year. Now imagine if that thing multiplies over 5 years at 5x, how smooth life would be for him and his family. Hold these for a long term. If you're looking to get out, it's usually a shitty company.
That's a fact. Shout out to EY University. You guys are asking very good questions today.
Yeah, they on point.
Too many good ones.
Yeah. Let's see. Let's go to this. This is a new name too. Shane, we coming to you. Unmute yourself. You've been unmuted. What's going on?
How we doing, guys? Can you hear me?
Hey, you perfectly.
Perfect. So my question is, we are just getting started. Both me and my wife are joining the platform, and the way that we're structuring our investments is we have an existing business, and I take my profit sharing allocation quarterly and just invest large chunks of money at a time. So it's not as much consistency. Would you guys recommend getting into the same positions over and over again on that quarterly profit sharing allocation to kind of build a larger position, or would you recommend exploring different opportunities each quarter?
What are you invested in currently in the stock market?
Currently, a little bit of crypto, Netflix, Alphabet, just, ETFs on like Stash. Not really anything. We just opened up the TD Ameritrade, so not much at this time.
Okay, you have the ones you named are good. As long as you're not like in come rocking in crypto, you'll be fine. Like as long as it's not the bottom 40%, you'll be fine. Alphabet, incredible. Yes. For all business owners, I tell you, if you're doing it on a quarterly, you can put a pending order there and then just do whatever size. But the great thing about the profit sharing, if you're taking that money and then putting it back into companies that are better than yours, you're doing a great thing. You just need more size. But if you can size up and get a few thousand shares a year, man, it's worth it. Absolutely.
Awesome. Thanks for the information, Ian.
Yeah. I agree with Ian. I would say just pick solid companies if you're going to do it quarterly, and just keep investing in them, right? Like if Apple's a company you believe in, keep investing in it quarterly. That's more. You've already got the discipline.
Absolutely.
Right? You got the discipline first. Now the action is going to take place. So that's something that most people don't have. They don't have a plan. They're just like, all right, I'm gonna do it today. I'm gonna do it tomorrow. 3 weeks. Oh, it didn't work. All right. And they forget about it. But you already got the discipline and the strategy. Now the action, just finding the companies. That's the last step. But you continuously put it in quarterly, 5, 10 years, 20 years.
You'll be good. And the more money you have, the safer investments you need. So if you invest in 10,000 a quarter, if you get to a place where you invest in 100,000 a quarter, you don't want anything that's going to draw down 45%. Doesn't matter how much money you have. You see something go down 40%, you're going to be like, oh, you can't even think straight. That's why I always tell you guys, like when things are at an all-time high, Now is when you need to plan. If the market drops, these are the prices in which I'm going to buy. Because when you're in the middle of the storm, it's too hard to. But and everyone writes this down. The more money you have, the safer the investment that you need to be in. Because if you lose 50,000, 60,000 in a week, it's not going to be a fun ride. And then you're not going to want to hear, well, it's going to go back up. You can be like, it's not your damn money. You don't care. We all get frustrated when the money's not right. So be mindful of that and pick your prices in advance.
You double down on your winners. Dollar cost average is more than just monthly. You can dollar cost average quarterly. It's the same idea, same principle. So you pick, a couple of good companies, see which ones you feel more comfortable with, which ones are the winners, and keep putting money into it.
Or you can come back here every Monday for the crystal ball and shot and
research. Yeah, absolutely. You still believe in only like a 7 or 8% allocation in terms of crypto during that profit sharing allocation? That it should mainly be in like larger winning kind of company positions?
It depends on what your risk tolerance is, because everybody says that to the moon and diamond hand shit until they got to put 200,000, then they lose 80,000, and knowing that it's going to go. And I'll tell you, if you guys are putting in big size, because I know you guys are, love crypto jumping me sometimes. Look to buy on Saturday. That may give you your edge. If you know nothing else, Saturdays are a good time to buy. You cannot buy on prime days when everything is rocking it up, because if it pulls back 8%, on 200 grand, 300 grand, it's not a good, because you won't even open your other investments at that point.
Yeah. My personal allocation is 10% in crypto.
Yeah.
For me personally, I have 10% of my portfolio in crypto. And once again, what did I tell you today? What was the advice that I gave you? Unrelated to this, but
which bar?
when
Crypto?
No. When you was talking about the other business that we had to call somebody for, what did I say?
Focus on what pays.
Focus on what pays.
Yeah, you got to take care of the cash cow.
Yeah. Focus on what pays.
You learn that in the basics. So, the leaders get the most attention. It's like LeBron James gets more attention.
The star always gets the attention.
KCP. You focus on the star players. And then a bench player can always become a star player.
True.
Yeah. But until that's earned.
Until that's earned. So crypto, Bitcoin, Ethereum, focus on the star players.
Yeah, and I put this on Twitter yesterday, and I haven't done it yet. You guys need to do the correlation, and somebody needs to look at a chart to correlate the date in which Bitcoin began to go up versus when the market began to crash last year, and see if there's a inverse correlation between the rise of Bitcoin versus our actual debt, not the stock market.
Yeah.
To see. And then I don't want to go with the Putin thing and all, but
oh man. Yeah, and Bitcoin has slowly crept back over 40,000. Yeah, Elon put out a tweet simultaneously as he was saying that the amount of electricity and waste being used has to be fixed, and then they're going to allow the acceptance of Bitcoin for Tesla. I'm not sure if there's a correlation there, but
clean, him and Part 2 there. But even with Tesla, like clean energy isn't 100% clean. It's just cleaner, but let
me just answer a few questions on YouTube that they might be new to.
Appreciate you, Shane,
to the show.
Absolutely, thank you, brother.
Somebody said, "How do you know when an investment is at an all-time high?" So if it's a stock, you can see what the 52-week high is, or you can just look at what their all-time high is on the chart, and if that is the number, you won the sweepstakes. So that's how you find out if something is all-time high. It's very, very easy to do that. And then somebody else said, what is dollar cost averaging? Dollar cost averaging is when you put in a certain amount of money into an investment every single month or every single quarter or on a regular basis, every week, whenever. So an example, if you have Apple, you put $1,000 a month into Apple every single month on the 15th. Your dollar cost averaging. The reason why it's called dollar cost averaging is because you might buy Apple high, you might buy it low. So you're averaging your buy-in price. And the theory with that is a disciplined way of investing. And over the course of time, you'll actually do better than most investors that will try to time the market by putting a lump sum of money in. As Trap says, time in the market is better than trying to timing the market.
Yeah.
So those are some
unless you got the crystal ball, and I share with Trap and MG and everybody.
There you have it. Can we get one more question before we wrap?
Yeah. And Ian, they still holding me to the entry points for those.
Oh yeah.
For MGM,
Yeah.
27.78 is a decent entry. And if it ever gets back down to 21.41, that would be a low to boat price. What was the other one?
We had Microsoft. A bunch of people put Microsoft in the chat. A good entry point.
Low to low price for Microsoft 202.46 is going to be a while before it goes there, but if it gets there, please write that down. And then 210.43.
And then I think you got to go in the crypto space. I think Doge and Shiba. I think.
Yeah. I'll give y'all that next Monday because I want to.
People got to be careful. I mean, even trying to buy Shiba is a process. It's an entire process. So that's not for the faint of heart. And if you're not experienced in the crypto space,
don't touch it.
Don't touch that.
But for my guy who asked for it on Twitter, I'll be sure to put it up. But yeah, I don't want to. But those, I'll get that price for sure.
I like a lot of new names in the chat. Let's go with this one. Kenya, we coming to you. Unmute yourself. You've been unmuted.
Hey guys, what's going on, brothers?
Everything's good. How are you?
Good. How are you?
Really happy to be here. I get it. I think you guys are gonna call on me. I'm all laid up, just listening, writing in my notes on Wall Mind, looking at different tickers.
doing the work. I love it.
I love that.
Yeah, I really am. So I had a question. I'm like 10 out of 12 now on your lessons in the investment category on EYL. I wanted to know, do you need to contribute a minimum of $6,000 to your Roth IRA to receive a tax break? And if I do, what is a good low cost index fund that I should add? I have an S&P, I have a water commodity FO, and then I have QQQ, but I was looking to do at least 3 more, especially because Ian, you just said 6 minimum or maximum.
Yes, 6 maximum.
Yeah, you have a great voice.
Yeah, I'm like, are you on a microphone?
Yeah, she got a radio voice. Yeah.
Yeah. We called up the station. Hey, how you doing, Kenya?
That's a fact. Okay. So
she topped my meditation voice. I'm like, damn.
Sure. I got to do a duet version. Yeah. Sure. I'm thinking the duet is
affirmations. We got to do those ASAP.
I'm down.
Let's do it.
Impeccable. So yeah, I mean, you could put $6,000 in and you get the maximum tax deduction if you are under a certain income limit. And so the IRA, a lot of times people don't know the full rules for IRAs. We actually taught a class on this at EYL University, but so if your job does not have a retirement plan or does not have a 401k, then it doesn't matter how much money you make. Mm-hmm. You can contribute $6,000 into the IRA and you get the full tax break of $6,000. It lowers your taxable income. It's not necessarily a tax deduction, but it lowers your taxable income. It's tricky. A tax deduction is like dollar for dollar. So what happens is that if you make $100,000 and you put $5,000 into an IRA, you're taxed on $95,000. So that actual savings might actually equal like $1,000 on your taxes. Mm-hmm. So, but neither here nor there. Yeah. You can put the $6,000 into an IRA and you get a tax break. Now, if your job offers a 401k, then you have to see how much money you make. We'll put the chart on EYL University on the Facebook page because it's like different tiers of. But you can just Google it. You can just go to the IRS website and Google the phase out. It's a phase out period to see if you qualify for the break or not. And then as far as what investments you can invest in, I'll let everybody chime in with that. But I think did you say you're already in the S&P 500?
Yeah. So
you was looking for more like ETF index funds type investment?
I have so I got the Roth, I have a custodial for my son, and then I have my personal. And I wanted it for myself and him too.
Yeah. So, I mean, the S&P 500 is a great one. And then, depending on what, you feel comfortable in as far as sectors, if you wanted to go to the ETF route, we've talked about a few today. Yeah. XLY is the consumer discretionary one. That's a good one. XLK is the technology one. XLF is the financial one. QQQ is more broad range technology fund. SMH is something I've been very bullish on. That's more specific just towards chip stocks. And then, of course, you have the ARK family, which they was under some pressure, but they're coming back. ARKK is a ETF that I'm personally invested in. That is the ARK Innovation Fund. Mm-hmm. Tesla's in there. Mm-hmm. A few other heavyweight.
Vanguard is VGT. It's comparable, yeah.
Yeah. So I mean, that's a handful right there. You can kind of just, I guess sort through that and see what you like.
I just love hearing it. You got the 401k, you got the custodial plan. You're doing it. Shout out to you.
Shout out to y'all. Shout out to y'all. I appreciate you, brother, so much. And Janet, she knows how much I love her. I was just with the orientation last Saturday, and it was really good. So you guys are doing amazing. Keep going.
Thank you.
Beyonce, if they do Lion King 3, please call the voiceover for Nala. Somebody.
I'm just chilling. I'm just laying down. I swear.
No, I don't know if that's the computer mic. That's an incredible. You are you on a microphone right now?
I'm on my laptop.
Wow.
Where are you from?
Yeah.
I'm from Crown Heights. I'm from Brooklyn.
Brooklyn.
Oh, we got something special for Brooklyn.
Okay.
Yeah,
we gotta pull up on us.
These affirmations. I'm about to write this down right now. Send me an email, please. I do not fear. I do not worry about trading. Sound better when you do it. Yeah.
There you have it.
Kenya, appreciate you. Thank you.
Thank you.
Oh, she muted herself.
Yeah.
She meant well.
Oh, you're welcome.
There you go. All right. Have a good day.
Yeah, I need that Red Panda tag and everything. Email me, please. Drop the email in.
EYL.
It's that Maybach music.
Yeah.
All right, ladies and gentlemen. We didn't do earnings report.
Yeah, I did.
I did.
Yeah.
Okay. Great show today. Hopefully you guys learned a few things, and more importantly, hopefully you execute and teach others what you have learned and make some money for yourself. That's the whole point. We appreciate you guys' support. If you would like the video on YouTube, that would be greatly appreciated. If you would subscribe to Market Mondays on podcast outlets, leave a 5-star rating and leave a review. That would also be greatly appreciated.
Yeah. Do that on all the entire network. So every day there's a podcast. Shout out Sleep for Suckers. Sleep for Suckers drops Monday. We got Rants and Gems on Wednesday. We obviously Tuesday is Earn Your Leisure Day, and then on Thursday we got Inside the Vote with Ash Cash. So make sure y'all check it out. And Sunday we got Inner Wealth.
Yeah.
And Friday we got our boy Casanova Brooks. So every day is something. So subscribe, like, comment, give feedback. We can get better.
And run up. You got something to learn every day from all these amazing people.
Yeah.
I know I endorse nobody like that unless I love them. Everybody killing. The Inner Wealth podcast, underrated too.
Yeah, that's a very important.
Go check that out.
Very important.
Dave and Elizabeth are different.
They talk about a lot of important, not getting enough sleep, not eating right, mental health.
I said, thank God that you're even alive every day. The way you treat your body. It's that podcast is a strong one. It's a very strong,
very powerful podcast. So shout out to them. And yes, Earn Your Leisure. We are on the move. Yes, we will be back in Atlanta. Should probably just move down there at this point. Yeah.
Like, I'm like, you gonna copy me?
We'll be back in town.
Shout out to the Circle of CEOs. They having an event. So I'm gonna go show my support for the bros. They've all been on Earn Your Leisure, every one of them. They're all EYL alumni. And bigger than that, they're good dudes. Marcus, really good guy. Alex, Mr. 2 Weeks Out.
Neo,
Justin, good guys.
We gotta add her 500 and Mrs. 2 Weeks Out as well. Shout out to them. I know they're not part of the circle, but they part of the circle. Yeah.
Collaboration over competition.
Big fact.
Absolutely. That is the way. Y'all got to get Market Mondays to #1 so I can drop the Stop Club for y'all for free.
Hey,
I'll be playing.
There's nothing that makes us more proud than when we go to those podcast charts and we see EYL Network up there 4 or 5 times. So run that up, y'all. Let's take
that Steve Stout interview. I mean, that Steve Stout, Rick Ross. Man, those are two of like, people don't understand how important Steve is. Like, I'm trying to give an analogy, but for Black culture, man, he's like our Steve Jobs. Like, he got corporate America to take us serious.
Yeah. 1000%.
Like, and kudos to everybody at Burrell, like, all my ad folks. But what Steve was able to do, how to blend hip hop at a time where it wasn't even cool to even be Black, let alone urban. Like, in AI, my favorite player, the real AI. Man, like, what he did was so, like, he's for us, he is Steve Jobs in terms of the advertising space. Translation is huge too. Like that does not get talked about enough. The stuff that he's done and ideas that he brought to the table and getting deals and of course, helping out. So go watch the interview again, the Rick Ross interview. Like I know the Barron one gonna be fine because Barron is very intelligent and underrated.
Dope one. That's a fine one. Shout out to United Masters too. Shout out to our boys over at United Masters, man. They always show love.
Shout out to the good folks.
Every episode, the Channing of America is up there.
Channing of America.
That's a slept on book, man.
Yeah, it's a great book. So like to sit down with him to even talk about what he had wrote in the book and see how important it was to him. That was a moment. That was definitely a moment. And while we talk about moment, we got last week we missed Ye's birthday, and so. We got the albums up today for Ye. We got the kicks up there for Ye, and we got my boy. You got him on your feet.
Yeah, for sure. Shout out to my guy Greg, man.
Yeah.
Yourself, what up?
And on another note, like go watch that Zayn Jalil interview with Kanye. Kanye is a master manifester. Like to be from the Midwest, and Kanye was not popular like when he was doing beats and goes to producing for D-Dot and all that. Like to see what he became from where he was, like. Man, if you guys don't believe manifestation is real, for anybody who's from Chicago, East Chicago, Gary, East St. Louis, like it was 100 producers that was probably more popular than Kanye and then become this pop icon. Like, set your sights high. Keep good people around you, execute like crazy, but believe in yourself even if no one does. Like, incredible stuff is possible. And even when I used to hear stuff like that, I'm like, oh no. Trust me, everything that I manifested that was bad, I said and thought first, and everything that good that came, I said. So trust me, manifestation is real.
Yeah, shout out to Kanye West, man. True inspiration for us. Shout out to Snow Allegra. Her album, and I really like her music, man. I really her album. Why you start laughing? Her album is coming out. How is it ready? She got an album coming out.
Oh my god!
I think it comes out this week.
you and Yosef about to get into
June
it?
9th. I mean July 9th. Snow Allegra's new album will be out. Hey, listen, Snow. Just asking for a friend.
I like that album.
Manifestation is real.
Perfect.
You and Yosef about to get into it.
Oh man,
that is hilarious.
Yo, yeah, the album July 9th. Shout out to Rock Nation. Gary B, please. We need a favor.
Shout out to Sherry. Man. All right, man. Make sure you guys check us out tomorrow. My boy B Diddy. And I actually made that shot. I was under a lot of pressure.
Yes. You did make the shot.
I was under a lot of pressure. But shout out to B Diddy, man. And make sure y'all check us out. EYL University. We got the Legal Club. We got our conversation, investment group chat conversation on Wednesday, and MG the Mortgage Guy on Thursday. So yes, that's it, man. Troy, what you got to say?
Yo, shout out to all of the students in the world. Shout out to all the students, because I know we're wrapping up the school year, but y'all have gone through something that was a tremendous feat, and y'all came out of it successful. Shout out to everybody that's graduating. Shout out to all the educators and everybody that works inside of the educational field that has really poured their entire life into this year. I know it was difficult, but y'all made it. And summer vacation is right here. So shout out to y'all. I'm always thinking of y'all. I am y'all. Love.
That's it. Ian.
Shout out to everybody at Rap Snacks. We need to get a EYL chips. I need like a Red Panda Healthy Kill chip bag with some cheddar cheese on it. I hope you guys enjoyed tonight's show. If I dropped 81 for you, let me know. I hope it helps you on your journey. Stay focused. To all my family, friends, love y'all dearly. Everybody in Red Panda, I love y'all with all my damn heart. And thank you to y'all. Like, I appreciate this. Like, it's fun. Every week it's getting fun and being able to impact people and touch some lives. So that's a stock club call at 9:00. But execute. That's the most important thing. And I know some of you be like, hey, can you make a free version of Stock Club? Market Monday, like Stock Club, Alpha, everybody, Sniper. Tell them I do not make slides and do all this for y'all. I'm literally telling you, like, if I charge for Market Mondays and all the work that we do, it'll be 100 out the gate. You know, I don't play with the prices. Like, every single week. Like, it takes me 6 days to prepare my part for Market Mondays, and I give it for free. Stock Club members and Alpha tell you, like, he don't make videos like this for us. get in that room and trade and call out spots. But no, so I love y'all and I appreciate y'all so much. For all of you that have made money, I appreciate you. Teach this to your family so it can be passed on for generations after generation. So
yeah, love. Yo, are you that's the pink Crayola marker you got right there?
Yeah, a little Sharpie, add a little color to it. So when I do the notes, it's not as bland, I had to write I got to send her an email. Somebody put it in the EYL chat. If I write a book and she do the voiceover, they'll buy it. So I'm like, sometimes you have to listen to the ideas and get the feedback. Better than my voice.
Shout out to Kenya.
BK.
Very soothing voice.
I'm glad you got on, but man, Mike, Janet, me, and Rashad about to do this drop for me.
Yeah, you know what? You know what would be a good idea? Like if Kenya did like children's books and it was like the audio version that the kids could listen before they went to sleep.
You low key should get on Fiverr for real though. No joke. Like, and begin doing your work. And if you make, we'll talk.
We'll talk about it. Yeah. Backdrop. Yo, love is love, y'all.
Actually, before did you ask her to put a Cash App Velda?
Oh, Velda. Yeah, Velda. If you have your Cash App, please
put your Cash App in the chat, please, because we don't. Janet asked for the Cash App, so if you're still on here, please put your Cash App, Velda.
She's about to scream through the computer like, "I'm here."
I'm putting it in.
Okay.
Thank you, Velda.
Thank you.
Janet, there you go.
Thank you.
I just said you was going to scream through. Perfect timing.
Yeah.
There goes Janet. Janet, you got it? She put it in there. Thank you. I appreciate it.
I got it too.
All right, guys.
Love y'all. Love is love. I'm going to take your line.
That's a fact.
Love y'all dearly.
See you guys tomorrow. Peace.
Peace.
Peace.